respond to that poll so that we can just assess what information we have concerning shares. So we just want to know how familiar you are with investing in shares, whether you've considered investing in shares as part of your financial strategy, and what you believe is the biggest benefit. Then thereafter, we'll get into our presentation for the day. I'll introduce our presenter for the day. We have Mrs. Dingase Makumba, who's our Manager Market Development. Thank you, Dingase, for joining us. And welcome to today's welcome to today's town hall. Yes.
Thank you, Sukali. Perhaps we go in first while I start my presentation.
Okay. Situation, you just guide us how many people we have that have responded for. Okay. So we are about 119 in the meeting. We have 94 people that have responded to the poll. Please respond to it. Everybody who are joining, and respond to the poll so that we just take note of our knowledge levels. So our first question, like I said, is on a scale of 1 to 5, how familiar are you with investing in shares? And then you have some options, 1 to 5. Then the second question is, have you ever considered investing in shares as part of your financial strategy? Our third question is, what do you believe is the biggest benefit of investing in shares? Okay. We've hit about 100 respondents so far, which is quite good. We'll give it another minute or so, then we'll close the poll and we'll open another one after the presentation is done. Yes. So on a scale of 1 to 5, how familiar are you investing in shares? Okay. So from the poll, our results are as follows. Can you give us the results? Okay, so for question 1, on a scale of 1 to 5, how familiar are you with investing in shares? We have 28% as our highest number, and they are. What's the answer there, Sijoni? For 3? What's the option for 3? So show the result for the poll. Yes. Okay, so we've seen that most people are familiar with shares. Then have you ever considered investing in shares as part of your financial strategy? That's a very good response. We have 91% of our audience today who have considered shares, which is a very good thing. And we have about 4%, 3% who are unsure. I'm pretty sure after the presentation today, we'll see different results after that. Our last question, the response is, what do you believe? The question is, what do you believe is the biggest benefit of investing in shares? And we have about 33%. We have about 36% who believe that investing in shares offers diversification. And at least 33 believe that it's a potential for high returns. Okay, that's good to know. Thank you so much for everybody who's participated in the poll. So the first poll is now closed. We'll get straight into our presentation, and we'll have another poll at the end of the presentation. In case you're just joining us, our topic for today is shares as an investment option in the capital markets. I'll now hand you over to Dingase, who's our presenter for today. Dingase is our manager for market development here at the Commission.
Thank you very much, Stanley. Quite an interesting poll there. To begin, let me just share my presentation. Here we are. So quite an interesting poll, because what we have is a very large number of people who believe in investing in shares, who have considered investing in shares, yet only 15% are very sure about how to go about it. And these are the questions that we have received as a commission most of the time, is what are shares, and particularly how to go about investing in shares. And in fact, this is what motivated us or encouraged us to actually start the town hall meetings, is to offer the public an opportunity to really understand what goes on in the capital markets, especially how to take up the opportunities that are there in the capital markets. So sometimes it's a market which has been misunderstood. Some say it's a market for the rich. Don't worry. Sometimes it's the terminologies that are used that scare people away. And all that is what we are going to address in this town hall meeting today. Really, the way I like looking at it is you find that these terminologies we use in the capital markets are quite descriptive, and you understand them from their figurative terms. For example, capital itself is really what you need in order to gain more value, to use to gain more value for something, and money is part of it. So those who are issuing securities or shares to raise funds are really looking for money. So it's nothing to scare people, and those of us who have the money, the households, the individuals, could be institutions, are going to invest with a different objective, obviously. But without being too preemptive, let me go into my presentation now. We're going to look at the following. This is the outline of my presentation today. We'll look at briefly, very briefly, about the Securities and Exchange Commission as regulator of the capital markets, and we are going to introduce capital markets themselves, and then we'll look at the terminologies that every investor needs to know when they have embarked on investing in shares. We shall also go on to understand a little bit more about what shares are as a security, and then we'll just show what listed securities are there, the companies that people can actually invest in on the market at the moment. Then we shall look at deeper thinking, what everyone is interested in, especially that 15%, is how to go about investing in shares. And then we shall also look at the role of the Securities and Exchange Commission in this whole agenda of the capital markets. Benefits of investing in shares, obviously, is a very are regulators, and we are here to look out for the interests of the public. So we shall be sharing some of the things that you need to be aware about, and we shall go into conclusion, and that very interesting session where we interact when we answer to your questions. So about the SEC, really the SEC is just a regulator which has been put in place by the government to take care of the interests of investors in the capital markets. It has a dual mandate, and the dual mandate entails that the Securities and Exchange Commission ensures the market is supervised and it is developing. Also, to ensure that investors who are investing in the capital markets are protected. So you might want to think of the Securities and Exchange Commission as the guardian of the market. Straight into area of interest, obviously, is an introduction to capital markets. And this is the case of shares. As Stanley mentioned, there's been a number or a series of discussion on many other investment options in the markets, which include the unit trusts and the bonds. All these belong to different asset classes or different securities. And so today we are going to particularly be talking about shares. Key terminologies every investor needs to know. We start with securities. Securities are just financial instruments for raising finance. Sorry, I needed to just minimize something. Yeah, securities are financial instruments for raising finance by the shareholders of a company. They come in two types, that is equity securities and debt securities. When we talk about equity securities, we're really talking about ownership of stocks that allow those who invest in these same securities, which are the financial instruments or financial products. It allows them ownership. So the company is sort of issuing part of its company to others to invest in. And when they do, they become shareholders of those companies. We do have debt securities, as the name says, and as I said earlier, really these terminologies are descriptive. Debt is really a company, somebody's trying to borrow from somewhere. And so these instruments are structured around borrowing from somewhere, and that somewhere is what is known as an investor. The investor who lends the money to this company is actually buying into the debt security of that company. So specifically or precisely a share, or also known as a stock, really these terms are interchangeable. They mean one and the same thing, and we shall find that as we go on, we might use them interchangeably. An example of a share of equity as an equity instrument represents units of ownership in a company. Securities exchange, the securities exchange is a market where the securities of companies and other institutions are bought and sold. And because of the interchangeable use of securities or shares or stocks, sometimes we find this exchange being called the stock exchange. We have our own Lusaka Securities Exchange, which was called the Lusaka Stock Exchange, and most of us will obviously be most familiar with that name, but they changed really because they are dealing with many other types of securities on their exchange or on their market. A stockbroker, who's a stockbroker? This is a firm that is licensed by the Securities and Exchange Commission to buy and sell securities on the stock exchange on behalf of investors. So the capital markets is a very organized market. It does things in a certain order to ensure that the investors in the market are protected. And for any company to come and intermediate on behalf of an investor, they need to be checked. And be able to trade on behalf of an investor. So we will learn later on that a stockbroker is the firm that an investor who wants to invest in shares approaches for them to facilitate the trade. And what is a trade? A trade is an action of transacting in these securities, or in the securities. It could be shares, or it could be bonds, or any other, on the securities exchange, which is the market. A trade is effected when buyers and sellers' orders match at a given price. We continue with the terminologies. I included bear market and bull market because we use this quite a lot when we are reporting, especially to the market on performance of the market. So these can also be seen as fancy terms sometimes, and maybe why the reporters especially would say this market is bougie. But really, like I said, these are just descriptive terms. A bear market is a market that is having a performance that is going down. Descriptive in the sense that it's actually derived from the close of a bear, because they actually are downward first. And so it means that the price is declining, and over a sustained period, usually of 3 months and over. So that is why we use such terms when we are reporting. It is very okay. Bearish means there's a prolonged decrease in the performance of the market. It can also be used for a single stock in singular terms. You might hear a reference to a bear stock. A bull market is the opposite of a bear market. This is when the market share prices are rising over a period of time. Understanding shares. So shares represent ownership in a company, as earlier mentioned. And when you buy shares, you become a shareholder and own part of that company. There are 2 types of shares. We have common shares, which these are the common types. And when you are invested in common shares, you have voting rights, and you also have access to dividends of that company. A dividend is a profit sharing by the company in which you have shares. There's also preference shares, and these preference shares offers higher claim on assets and earnings, often with fixed dividends, but usually no voting rights. What I am showing on the screen is the current listed companies on the Lusaka Securities Exchange, which is the only exchange that is trading in the stocks or shares. So I'm sure these you are familiar with, because there's always, usually during the news on ZNBC, we have prices that are scrolling down. And this is the time when most of us are thinking, how can I actually become a shareholder in one of those companies? And we shall soon be getting to that. So how are shares issued? There are 2 ways. They are issued at initial public offering. This is when a company first offers shares to the public. And there's also secondary offering when additional shares are offered by a company already listed on the exchange. So this might happen for different reasons. A company will be needing capital for different business decisions they have made. Maybe they want to expand, or they want to manage something. A business decision has been made by the owners of the company, and they decide to issue additional shares. And that is called the secondary offering. Okay, so sorry, just give me a minute. Okay, so what is the role of the SEC in all this? The SEC establishes the regulatory frameworks. That is, it establishes and enforces rules and regulations that govern the issuance, the trading, and disclosure of shares to maintain the integrity of the market and to protect investors from fraudulent activities. You might want to think of this as the ultimate purpose for regulation, is to protect investors who are going to be trading in this market. The assumption is that not every company that might come to the market be having intentions to deal with honesty. and because it's money that is involved, it has to be, we have to make sure that investors' interests are protected. How does it do that? It prescribes disclosure requirements. The SEC mandates that publicly traded companies provide accurate and comprehensive information to investors, and investors are going to be making decisions on the information that they have. So sometimes, as regulators, we know that there's what is known as information asymmetry, where the information that the investor is holding is not equal to the information that the issuer is holding. But the SEC will require that there's disclosure of at least all the pertinent information that is required on which investors can make their decisions to trade, to sell, or to hold, depending on the strategy that they might be having or what they might be needing to do with the holding that they have. The SEC has the powers to enforce the laws that of the Securities Act, under the Securities Act, and this is to ensure that they actually uphold what the securities market should be performing, and this is under supervision and enforcement mandates. So the SEC will investigate and take legal action against individuals and companies engaged in fraudulent or manipulative practices that harm investors or disrupt the integrity of the securities market. You might be asking what this mean or what are manipulative practices. Sometimes it is simply giving false information to investors so that they act in a certain direction. For example, the issuers or the brokers might be having they might be knowing that things are not working out well in the company, but they issue information that suggests that all things are all right. And if an investor was going to sell or to actually buy, they do the opposite, which is a misleading reaction to what news was given out. And the Securities and Exchange Commission has the powers to investigate that action and undertaking the appropriate enforcement. Other functions that the Securities and Exchange Commission as regulator are doing is exactly like what we're doing today, investor education. Our role, in fact, is not investment advice, it's about investor education, because we believe a knowledgeable investor is able to help himself before the SEC even comes into play. So the SEC will conduct initiatives to educate investors about the risks and rewards associated with investing in shares and other securities that are there in the market, that are authorized in the market, and make informed decisions with that knowledge that they have before they fall victim to scams or fraud. So now we look at the benefits of investing in shares. Number one, we have capital appreciation. Capital appreciation simply means that the value of shares are bound to increase over time as the company grows. So when you buy your shares, you're hoping that you will experience an increase in the value, so your capital increases in value or simply appreciates. I think in the next slide or so, we are going to demonstrate how that happens. We have dividend income that is one of the benefits of investing in shares. And dividend income is simply periodic payments to shareholders from the company's profits. So when you are a shareholder, you also participate in you earn from the profits that the company has made. And how much dividend income you earn depends on the amount of shares that you have in that company. Voting rights as a shareholder in common stock. Remember we said common stock entitles you to voting, and this means that you can vote on corporate decisions such as electing board members, and this happens during an annual general meeting And as they say, we encourage every investor in shares to actually attend annual general meetings where they are able to be explained to or how the company has performed, and some of the decisions that they wish, or corporate decisions that they wish to undertake to improve the performance of that company are put to a vote, and the shareholder actually has the right to vote. We continue with the benefits. Liquidity is a benefit. Liquidity is simply a term that speaks to how easily you can convert your shares into cash. So when you invest in shares, you might be worried, how then does this translate to cash? The market itself, the exchange provides a trading system in the secondary market where you can sell your shares quite easily. And this, again, you do through your broker. So you instruct your broker to sell parts, or depending on what you want, if you want to sell all your shares, you can do that. And that way you actually get access to some cash. Other benefits include diversification. So investing in shares allows diversification across sectors and industries, helping to spread your risk. We might have heard of an adage which says, do not put all your eggs in one basket. So if you're invested in, or you have exposure to only one type of investment option, it could be in the same financial sector or other sectors, you run the risk of falling along with the failures that might happen in that market. So it is advisable to every investors to actually spread the risk by diversifying their investments. So shares being an option is a way that you can actually undertake that diversification strategy. We talk to the risks of investing in shares. Number one, market volatility. We do not shy away from saying that prices may rise or fall in the market depending on what is going on in that environment. And so with that fluctuation, you find that you might lose the value on your capital, or the initial capital that you put into the investment, or your initial investment basically. And this might pose a risk of loss of your money. And sometimes in very serious cases, maybe in other markets, we've seen that you can really get down to zero. Okay, so it's important for an investor to know that and to see how they can best mitigate that kind of risk. And part of the ways outrightly is to ensure that they are watching the performance of their shares, or the stock in which they have shares. Okay, company risk is the risk that is emanating from the fact that the company's performance may decline, affecting share prices and dividends. So in such a time of company risk, you might not receive your dividends if you were looking for one. And because you're a shareholder, you are actually sharing in both the gains and the losses. You are an owner, remember, you are an owner, and it is assumed you even take part in the decisions that are made. It's just like your own company, except you're not owning it by yourself. You're owning it alongside others in the public. And so when things happen in that company, they might happen for the better, then means you're better off, and if things fall, you also fall. There are no guaranteed returns on the stock market, unlike bonds, which are fixed income securities. The shares are not. Shares do not guarantee returns and may result in capital loss. Economic and political factors. There might be changes in economic conditions, government policies, or geopolitical events can impact the stock. I think we are quite familiar with this. Sometimes governments have just come up with certain policies, maybe nationalizing, or in fact, when there could be even closure of certain companies for certain reasons, and that impacts your holding in that stock. climate risk is something that everyone is now, we don't need to say too much about it. We're experiencing this risk, all of us. We're seeing how climate can impact companies. I hope I'm still audible. I'm seeing a network challenge here. Okay, so climate risk has potential consequences of climate changes to the business. And this could be things like, for example, let's just get an example of a company that is probably bottling water, and in the environment in which they are, the wells are drying, the boreholes are drying, and that really exposes them to probably poor performance. So an investor might want to assess that risk and also might want to influence how the company responds to mitigating climate change. So that is what are known as environmental, social, and governance assessments that investors must make when they are trying to invest responsibly or when they're trying to get exposure to certain companies. I will share. Okay, yeah, I did notice a loss of network. Just give me a moment. Okay, Strani, maybe you can come and help me. So let me do it quick. I'm stuck.
Okay, as Ingase is sharing her presentation, just the network challenge. As she's sharing her presentation, please note that we are live on Facebook as well. So we have, if you've got any comments to our Facebook audience, please just post them there. We will take note. And if you've got any comments for this presentation and the questions, post them in the chat section. We'll attend to them after the presentation. Okay, I think we're back on. Back to Dingase.
That's fine. Sorry. Okay, I think we dealt with the risks, and now we go into how to invest in shares. Sorry. Okay, so this is a demonstration, before we go into how to invest in shares, this is a demonstration of how capital gains are calculated. And just as emphasis, this is a gain or a loss that represents change in the value of shares held by an investor. And it might reflect an appreciation or a decrease. So for example, if an investor buys a share at 10 kwacha and the price increases to 15 kwacha, the investor realizes a capital gain of 50%. And that the calculation is as depicted. It is the current price less the initial price at which you bought, and you calculate using the initial price, the divisor being the initial price, and you get your 50% appreciation. The opposite is what happens when there's a depreciation, and using the same amounts, if you have your share price has decreased, if you bought at 10 kwacha and your share price has decreased by 5 kwacha, which is likely to happen. Remember, we said the risk is that the market may be volatile and this might affect the share price. You are going to have an appreciation loss of 50% if, or any other percentage, depending on the amount that the share price has decreased to. You just need to calculate using that formula. And that is how your capital gains might be affected. So it might be capital gains or capital loss. So now we go into how to invest in shares. The first step that you take, you cannot actually buy shares by yourself. You have to go through a stockbroker. Remember, this is a structured market. This must not intimidate anyone. It is simple, it's quite easy. All you need is to identify a stockbroker, and this you can find even on our website, or you go to the Lusaka Securities Exchange, to which brokers are members. So those who have been licensed to do brokerage business are clearly stated on the exchange website. I believe it's www.luce.co.zm, and if it's you go to SEC, you find the brokers under dealers. They are also called dealers. And so you can go to our SEC website, www.seczambia.org.zm, and find the brokers, and you have to do your due diligence, understand their expertise. You can ask around, read through their websites, and pick one which best meets your needs. But basically, if you find them, it means that everyone who is there can undertake trading on your behalf. What they'll ask you to do, or what to expect, is that they'll ask you to open a brokerage account, more or less like the way we open our bank accounts, and they would ask for KYC, like know your customer requirements, your registration card, your identity, and even your abode, where you live, and they just want to determine that you are physically present in the country, because there's also issues that are being taken off in the back office, like ensuring that we protect our country from money laundering. And so all these are requirements under the laws, even the securities laws. Then after opening your brokerage account, each broker has fees, has their own fee structure. You need to understand how much that fee structure will impact your investment. So you need to be asking all these questions, and you ensure that you contact the broker, the specific broker that you have chosen for their fee structure. They should be able to give it to you. And when you're ready to trade, you have to give an instruction or authorize the broker to purchase the desired shares that you want to buy. You might also want to sell your shares, that is trading. Similarly, you will have to instruct the broker to sell the shares on your behalf. And the broker has got the tools to ensure that they match. Somewhere, if you're selling in the secondary market, someone else will want to buy. So they will match your buy and the sell orders. Somebody instructed them to sell, and you want to buy, they'll match the two of you, and you have your trade. And I think one terminology that we needed to have spoken about is the T+3, which is simply trade, which simply means that your trade is expected to settle in 3 days, not more than 3 days. So if you're expecting cash, or you're expecting the actual securities, it must reflect after that 3 days. As Securities and Exchange Commission, as a regulator, and as providing financial education, we encourage you to monitor your investments. That is, you must keep track of your share performance and stay updated with company news and market trends. And when we issue advertorials that are educative, we say, remember to do your part. We have rights and obligations. Do not sit back after buying shares and think that everything else will happen on their own. Determine what encourages you to invest in the market. You may want to have growth in terms of shareholding. Remember that shares will not grow by themselves. You have to keep on instructing your broker to actually buy the shares. Many people have sat back, and after some time they report losing their shares. They don't know where they went, simply because they didn't keep in touch with the their shares or their performance in the way. I don't know whether it's paperwork or something. You find that you never even got your confirmation of a settled trade, and it becomes very difficult. So we encourage you to actually attend annual general meetings, because there a lot of information is shared with the shareholders of the companies, including how the company is performing. It might just be a time when they are issuing very, very important information that helps you make certain decisions. And the decisions can be different. There are different investment strategies that people make. You might want to come out of that market or that stock, or you might want to buy more because you know that the performance is doing very well, is bullish, and you might want to maybe just keep on adding to the shares that you have already and grow your shareholding. So key considerations before investing in shares: assess your risk tolerance. Remember, we said the market can be volatile sometimes, so you need to assess your ability to handle market fluctuations and potential losses. This, as you speak to your broker, remember the broker is an investment advisor. You need to ensure that they assess this risk tolerance. It means that you might not be able at the stage you are to actually bounce back from a certain loss. Maybe it's because of your age, or maybe you're a retiree, or maybe that's the last money that you have, depending on different factors which the broker or the investment advisor you're advising with, you're getting advice from, is able to tell. So that informs your risk tolerance. And even your health sometimes can be part of that. Some people cannot take certain fluctuations if they are too much. It might be affecting your health. So you need to really understand the stage at which you are before you invest in shares. And number two, you define your investment goals. What do you want to get out of these shares? Is it a retirement package? Is it a retirement earnings, something to keep you going in your retirement? Remember, if you started holding your shares early enough in your years, in your age, or in your life, selling shares bit by bit later on in your life might just help keep you meet your financial needs. Is it an education? Some people have gifted their children with the shares, or share an asset that is with shares at a time when they need to go for school. So you might have a baby today and you decide, I'm buying shares, and you're hoping that there'll be gains in terms of capital gains and even the dividends, and these you may decide to compound them over the time the child is going to start the education. And this all that is part of your decision making or defining before you go into the share. And you need to understand the performance of that share or that company in which you are buying the shares. Is it likely to grow, or is it just dividends that it's likely to be giving you? And all that can be defined as you sit and discuss with your broker. Or is it wealth accumulation that you're looking for? Such companies obviously are those that are consistent with giving out dividends, or they're very profitable, the profitable making companies. So you'll be getting both dividends and maybe growth in the capital gains. What time horizon? You need to determine again how long you plan to hold your shares. Is it short term or is it long term? All that you need to understand, and that will also be derived from certain information, or from the use of the proceeds that are going to come from the shares. Performance, industry trends, and market conditions before investing. And here you look at those risks that we talked about, and also the potential of that industry that is coming up, or in which you're trying to invest in. Could it be like right now we do have certain things happening. Climate risk is quite high on the radar of risks, but there are companies which are actually benefiting out of it. They are opportunistic companies, or they are just companies which are already there, and you might think that, or you might establish out of your research that such companies are going to be benefiting from what is happening currently, and that informs your decisions. Investor alert, we regulator, we said we are guardians in the market. So if you are approached by someone offering investment products, remember to do your part by asking to see their Securities and Exchange Commission investment advisor's license. Remember, these licenses are not given to just anyone. They are given to people who are fit and proper to advise you. That's why it's very important to ensure that you are advised by somebody who is licensed. It's part of the functions of the regulator, which is the SEC. So this will have to be a SEC license. We have an announcement to make as we come to the end of the presentation. We have more information coming, and it's going to be around the World Investor Week. It will happen from the 7th to the 13th of October. There will be a lot of such webinars, and they are going to speak to a lot of things: investing basics, scam and fraud, how to avoid that, and you have those learning opportunities. You will even have webinars that speak to what kind of conversation you should be having with an investment advisor. All those things are important to learn about. And remember, sometimes if you are outside the such opportunities like the World Investor Week, you might even pay to get investment advice. But during this week, it will be for free. So I'll just show you a calendar of when you can actually come and or get engaged with some of these people. We hope that there'll be actually open days during their work days, but we're going to have an exhibition on the, let me see, on Saturday and Sunday. This is going to be the 11th and 12th and I think 13th. We'll be making announcements. Please follow us on Facebook. We will ensure that we give you daily updates of what is going on and where you can find areas of interest in which you can participate. Remember, the capital markets, the Securities and Exchange Commission, together with the entire financial sector, is trying to develop the capital markets through the capital markets master plan, and part of the development areas is to ensure capacity building across the market, and the stakeholders in that includes the investors themselves. So unless you really empower yourself with knowledge, it's unlikely that you're going to make good decisions around your investments. So please, thank you for joining us. Because you're showing interest in your financial welfare. This is commendable from our standpoint as regulators, and we hope that we can only wish you very well in your investment journey. This brings me to the end of my presentation, and I'll hand back to Stali, our moderator. Thank you.
Thank you so much, Dingase, for that very, very insightful presentation. I'm sure we've learned a lot, and I can see there's a lot of interest. We have a number of questions that have come through. But maybe before we get to the questions, let us just launch the end of our presentation form so that we just assess what information we've gotten out of the presentation. It will also just help us start the discussion. Launch the plot. Okay, so I'd like to invite everybody to just take part in the poll. It's a very short poll. It's just a minute long. It's 3 questions. So the questions are similar to what we saw in the beginning of the presentation. So on a scale of 1 to 5, how familiar do you feel with the feel after the presentation? This is how do you feel familiar? Do you feel with shares now that we've heard what they are, the benefits? Okay. So the results are coming in. The second question is, after the presentation, how likely are you to invest in shares as part of your financial strategy? So now that we know what shares are, how likely are we to participate and to invest in shares? Then our third question is, what do you now see as the biggest benefit of investing in shares? Tinkase did speak to a number of benefits that come with investing in shares. So what do you feel as an individual is your biggest benefit of investing in shares? So we'll give it a minute. Let's just take note of respond to the question, the poll. We have a total of 248 participants, almost 249 to almost 250. So if we can get to at least over 200, that would be great. Yeah. Mhm. Okay, so that's pretty good. Okay, those are the results that we're seeing there. Okay, so can we just see the results? Okay. Okay, so on a scale of 1 to 5, how familiar do you feel with the presentation with investing in shares? So we have at least 45% who are quite familiar now. We have at least 66 people that participated in this. Then the second question, after the presentation, how likely are you to invest in shares as part of your financial strategy? Very likely, which is very good. That's very good feedback. Mm-hmm. And for the last question, what do you now see as the biggest benefit of investing in shares? Okay, so for this one, we have almost a tie. Our highest score is diversification. So it's good that people have learned that shares are a way for you to diversify because they're not the only investment option that you have. So it's good that at least 35% feel it's an option for diversification. And then at least 29% feel its potential for high returns. Okay, that's very good. And thank you so much for participating in this poll. Tingase, would you like to make any comments with regards to the poll?
Yes, and of course, this is very delighting to see that the levels of understanding have at least improved, and there's more likelihood of people investing in shares. And this is really commendable. It's encouraged as the benefits we saw. The markets are there for you, and really we must be taking the opportunities that are there in the markets to grow our wealth. Thank you.
Okay, thank you so much, Tingase. We'll get straight into our Q&A session. We've got a few minutes for that. The first question is from Cletus. Why are the share prices of some companies often static and unresponsive to market sentiments on the loose? What are some of the drivers of share prices? So Dingase here will respond to the questions. We also have a team, we also have other members of the SEC team who are also on the call and will be able to assist with some of the questions. So the first one is, why are the share prices of some companies often static and non-responsive to market sentiment?
Well, to tell, it also could be the fact that the markets are not really that developed, and also the investors are not that knowledgeable to drive the price discovery, to drive the performance in the market. So you see, I think in Wall Street, we see our most investors will be standing watching prices all the time, but in Zambia, we buy and hold. I don't know whether it's a deliberate strategy, but you find that people, institutions who are buying into shares tend to buy and sit back. Remember earlier I was saying things will not be happening by themselves. You need to be watching what is happening and be able to be active in the market. So it's really alluded to the buy and hold strategy or behavioral aspects in the market.
Thank you so much for that. Cletus, I hope that answers your question. You have a follow-up question. Do you have index funds in Zambia similar to the S&P 500 index funds in the USA? If so, how can one invest in these index funds?
I think what the closest there is to such funds are like the equity fund under a fund manager, under mutual funds or the unit trusts. Um, who are actually pulling funds from different investors and investing in certain asset classes. And sometimes you find that one of the asset classes is the equity. So you can invest indirectly. But in terms of an index fund, I don't think we have one that is already established, like the S&P 500. But if you want to invest across a number of equities or a number of shares, these can be found with, this strategy can be found under the management of a fund manager, which is the collective investment schemes or the unit trust. And when you go in like that, you have to ensure that you instruct that you are investing under an equity fund asset class. That way, the fund manager will invest for you across the different, maybe high performing, according to the fund manager. They have expertise in ensuring that they understand the performance of the market, and they will invest the funds of the under the unit trust in only certain stocks or shares or certain companies. So it works a little bit like the index fund would work, because the index fund will always be tracking a certain level or tier of shares, and these must be usually those that are performing very well. At the moment, we don't have.
Okay, thank you so much for that, Fiscal Stingase. Our next question comes from George. Says, do you actually receive cash from capital gains just after selling your shares? You did speak to capital gains as one of the benefits of investing in shares during your presentation. So does one receive the capital gain in form of cash immediately after?
Yes, you do, because it follows that. That kind of thing where you say it follows that. If there's been a capital gain on yourself, then you receive the cash. Yes, so you do receive it in the
Yes, okay. Thank you so much. What is the starting point when I want to buy shares? I think this is also something you did mention.
Just to emphasize, or maybe I had already mentioned this. So your starting point, it starts a little bit actually before you find your broker or you open a broker. You have to make some decisions, understand your current position, ensure you have the money, ensure it's advisable that you actually also ensure that you have an emergency fund. You know, an emergency fund is a savings where you have saved some money that can help you if you have an emergency. Why I'm saying that is because if you invest your money, the money that you might need in the short term, you might make some wrong moves. You might want to go back to your shares before they even give you the returns that you're looking for. So it's better first to take care of your financial position. You take care of your debt situation if you're in debt. Of course, maybe that kind of debt which is not giving you back the quite. Not all debt is bad, as we may all know. But if you are into a situation where you it's not a good situation with the money wise, you might not be ready to start investing in such long-term investment products like shares. Long-term in the sense that you might see your gains over the long term, over the long run than the short. You might want to stay in the market for you to see your capital gains, for you to see your dividends paying you back, and for you to see the compounding of the money that you have invested happen. So it's best that you first take care of your financial situation, and after you have made that decision, you have identified that it is the shares that you would like to invest in. You then need to approach a stockbroker. You need to find a stockbroker and open your brokerage account, and your trading can begin as you instruct the broker to buy the shares.
Okay, now that you mentioned the broker, there's actually a follow-up question to that. What's the cost of hiring a broker? What's the fee? Is it an annual fee, or is it each time someone buys shares? What's the cost?
So you need to expect a 0.0125 or something like that. That is minimum, I think, prescribed or agreed upon in the market. If there's something higher than, then it goes with the broker's fee structure, but they are within a certain range that is allowed by the SEC. And also the LUCE, who is the regulator for the brokers. Now, brokers are members of the exchange, which they are facilitating trades for investors. So it's important to ask those questions as you meet with the broker.
Okay, and there's another question speaking to dividends. When does one receive a dividend? Is it annually or monthly?
What are known as interim dividends issued, and also the common type of dividend. The major practice in our market, the common practice is an annual dividend. That's why we have annual general meetings. Usually that is where the intention to issue dividends is announced, and the shareholders will vote to do so or not to do so. But when the company is performing very well and the management decides to issue more dividends, of more frequent dividends, they are going to be called interim dividends, and these might be issued as and upon the management decisions. Yes.
Okay, so there's a question from Webster. How liquid is our market? Like he's asking if will I have difficulties in disposing of my shares once I've bought shares and I feel like they need to sell them off.
The demand and supply of those shares, one of the problems that we have in our market, or the challenges we have in our market, is that of illiquidity. Some of the shares are difficult to sell. They are not on demand simply. And that also must be part of the discussion you're having with your investment advisor or your broker. But otherwise, I think we cannot generalize. Some are easily sold, some are easily bought. Sometimes there's shares you want to buy and you don't find them. Nobody's selling, everyone is holding on to what they have. So there's those things, and they must be established at the point when you're having your discussion with your broker or your investment advisor.
Okay, thank you for that. I hope that answers your question, Mr. Webster. Um, Why can't, there's a question from Tom Kamwendo. Why can't the Lucy share purchasing process be simplified to enable small retail investors to buy shares using their smartphones or computers? I'll marry this question with another question from George, which is talking about challenges using the Lucy app, because I think the two are speaking to digitizing the process of buying shares.
Yeah. I think we cannot be agreed that that would be the best place to be if we can actually have the MyLucy app working very well. And I believe this is a very positive development in our market, that we have an app where we can actually buy or trade our shares. It's in its initial phases, and it has experienced its teething problems, but the Lucy is really working on it, and hopefully it will be up and running to benefit the investors. There's been quite a number of problems that have been reported, but the Lucy have assured that they're working on those.
Okay, thank you for that. We're almost at the end of our town hall. We're supposed to end at 16 hours. So we'll just take two more questions, then we can close. Can you have two stock brokerage accounts with two different brokers? That's the question.
Yes, I think that's possible. But you have your shares held in a central securities depository, I think, with one identity, because you use there is what goes on again in the back office. Like we had with bonds, there's a CSD account that is open. Same with shares. Your shares will be held in that central securities depository because it will have your unique ID using your registration number. But you can have multiple brokers.
Thank you. One last question. How can one know that the prices of shares has changed? Does the broker provide this information for free, or is it charged?
I think you need to watch the market for that. There's actually, it's part of the disclosure in the market that is there. Every day, you're supposed to have the price at which the market is opening and also closing. So it is up to you as an investor to watch the market. You can actually subscribe to the SENS. The SENS is it's a news. It's called what? Stock Exchange News.
Yes.
Yes. If you subscribe, you'll be receiving that report, that information every day. They will show you the opening and the closing price of your securities. But you might need to pay something to subscribe, I think. Is it Stadia? But if you want free information, it also comes on the NBC. Every day the prices are scrolling on the screen. So that's where you are able to tell price movements. It is very encouraged. If you are owning any shares, you must be able to know every day what share price or what the price is looking like for your shares, because that will help you make the right decisions. You might want to sell or to buy more, maybe when the different things are happening, shares are low. You might think this is a time to buy some more shares, or you are scared if you are not ready to lose. If you are in the market for a short term, you might decide to sell your shares at that point when the price is going down or is not diving. So it's really important that you watch the share prices like that, and it will inform what you must do with the shareholding that you have.
Okay, thank you so much, Tingase. I know we have a lot of questions concerning this very interesting topic, but unfortunately, whatever goes up must come down, and we have come to the end of our town hall for today. We will, as usual, share the presentation and also share the responses to all the questions once they are responded to. Thank you so much, everybody, for joining us. Join us next week for yet another interesting topic. Next month. for yet another interesting town hall. And as Dingase mentioned, we will be having the World Investor Week. So look out for a lot of interesting activities for that, and also a lot of webinars that will be going around, and see how you can participate and become a smart investor. Thank you so much for joining us. Have a good day.
And if that video is there, it would have started playing.